In today's video, we're going to take a look at the S&P futures contract. And I'm going to tell you that anybody who tells you that they know where the market's going to go is absolutely full of crap, okay? Because nobody really knows what the market's going to do. But if you do use technical analysis, you can look at past patterns to identify when something might change, okay? And you can trade setups. And you don't have to know where the market's going to go to trade a setup. And I'm going to give you a really good example of that here on the S&P futures. But before I do that, let me tell you that one of the things that we saw this morning was that this prior decline was 58.25 points, and that compared to this prior decline, and it was exactly the same. Okay, so we had symmetry as far as these swings down. And if this is only a corrective decline, which we don't know if it is, but if it is, your typical target that you're going to look for is the 1272 of this full two-step pattern. So that's a possibility. But with that being said, we don't know if, now let me find actually my little recording tools here. We don't know if we're going to actually see the continued rally, or if you're going to get something like this. You might just get a rally into resistance because there's a new bearish pattern from the recent high. So maybe you only get here or here, and then it rolls over and dies. So again, I don't know which of these scenarios is going to play out. I just know that I have defined risk against this, and I have defined risk against this. Now let's look at what we saw in today's session. So with this symmetry projection here, we knew that we were into a key price support decision. And what do you need to see in order to take a trade? Well, you basically needed to see a trigger. And if you looked at where you were going into this key support decision, the pattern was a bearish pattern of lower lows and lower highs. What was the signal? Well, when we both had the 834 EMA crossover to the upside, and you took out a prior swing high. Once both of those things occurred, you knew it was okay to look at the buy side. This is actually a 1-minute chart in S&P. Some of you actually use like a 233 tick or something. But bottom line is when you had the moving average crossover and the shift in pattern to potentially higher highs and higher lows, that was when it was okay to start looking at that test of support. And you can look at the buy entries and then have your stop either underneath that last low or underneath the zone, depending on how you've written up your trading plan. But when this occurs, do you need to know what the market's going to do for sure? No, you just needed to know what the setup was, what the trigger was for you to take a risk, and then where's your initial stop, and then how are you going to trail a stop. Okay, so that right there proves that you don't have to know what the market's going to do to extract money from it.